Bank of England is expected to cut rates this week, but why does Britain still have such stubborn inflation? A rate cut in the UK this week is considered baked in by the markets, but they expect disagreement among policymakers who are divided over how much price pressures are easing. Inflation rose to 3.6% in June. That's the highest since January 2024, and some economists think it will soon hit 4%. Dani Stoilova is UK and Europe economist at BNP Paribas. Dani, the Bank of England is facing quite a challenge, isn't it? Why does Britain continue to have such high inflation?
The Bank of England is definitely facing an array of challenges. And at the end of the day, monetary policy is a question about risk management. How do you manage the trade-offs between still sticky price pressures and relatively subdued growth? While we do agree that a rate cut is all but a done deal on Thursday, we really think that until the supply side weakness in the economy is handled, which is not something that the BOE has full control over, that inflationary pressures will still be sticky. So we think this is something that will keep the Bank of England on this gradual and careful approach to easing until they have more evidence in one direction or another.
Do you expect then that the slowing labour market and slowing growth will bring inflation down and give the bank a stronger case for more cuts towards the end of the year?
The slowing that we've seen in the labour market so far is almost a necessary prerequisite for these domestically generated inflationary pressures to come down. And given what we've seen, we do think that this opens the door for the BOE to continue its easing cycle, but we're not convinced yet that the Bank of England should accelerate the pace of easing. And that's because the dynamics that we're seeing right now in this slowing in labor demand really tell us that it's more of a recalibration in response to the policy measures that were implemented in April and a normalization to the trends that we were seeing pre-pandemic, rather than a sign that labor demand is completely falling apart in the UK.
We expect to see the members of the Monetary Policy Committee having quite divergent opinions, don't we?
We definitely do, and this again goes back to what I mentioned before about how different policymakers view the challenges ahead. We ultimately think that the MPC will vote 7-2 to deliver the 25 basis point rate cut, with 7 members voting for this 25 basis point reduction, but we expect to see 2 voters dissent on the dovish end and vote for a larger 50 basis point rate cut on the back of their well-flagged concerns about the UK labour market and this risk management approach to monetary policy.
You said you don't expect the bank to speed up its pace of cuts, but how much are you expecting over the next year?
We definitely think that there are still a few more cuts in the pipeline for the Bank of England. We have a long-held view here at BNP Paribas that the BOE would ease until it reaches a terminal rate of 3.5% in the first quarter of 2026 through these quarterly rate cuts in line with this gradual and careful approach that they've outlined so far. And the reason behind that is we think that the BOE will ultimately have to keep rates mildly restrictive into the medium term to completely stamp out these inflationary pressures that are being driven by the supply side weakness.
What's the bigger risk, that they cut too quickly or not quickly enough?
I think right now, in our view at least, the bigger risk here is that potentially the BOE cuts too quickly rather than not quickly enough, especially because we're seeing some signs of life in consumer spending finally. We're seeing labor market surveys point to potentially more positive outcomes on that front in the year ahead. So there's not clear signals that the economy is falling apart. And I think some pessimism on the UK economy lately has been a little bit overdone. So for right now, I think the Bank of England's focus should remain staunchly on inflation and getting inflation back to target. And I think that's ultimately where they will land.
That's Dani Stoilova of BNP Paribas. Don't forget, you can watch more videos on Reuters.com.